So when you were looked at someone who is risky, that means they're going to give you a much higher interest rate. And so, for instance, when I purchased my car, my interest rate.
Oh, so thank you so much for all our viewers. Today we're going to be talking about credit building, and use of credit cards. This program is specifically directed towards refugee families that were settled in the U.S. In any of the states. But of course, we're recording this live here at the University of Scranton, in the city of Scranton, northeast Pennsylvania. So, of course, our today's guest is a former bank employee. He's a former refugee reception and placement caseworker with Catholic Social Services, a current employee of Job Corps, an adult school program. He deals with finding jobs for many of the youth that have trainings and are looking to be employed somewhere else. He's also a father of a boy, and a friend of the Congolese community here in Scranton. So you're welcome, Eric, for this program. And of course, we're going to be discussing about credit building, and why people need credit cards. Because as you and I have discussed this before, we all know that many of our families coming here as refugees find it very difficult to learn more about financial things that relate to this country. We came here, we're told how to fill out forms for food stamps, for example. Sure. We're told how to apply for social security cards, health insurance, and all that stuff. But no one told us about credit, for instance. No one told us about how to maybe open different bank accounts and for what reason. No one told us about investment, and it becomes a very big problem because we at some point have to buy houses. We at some point have to maybe buy cars through the banks, and all this becomes very complicated. That the question comes back to what's credit. So today, you having worked for Bank of America, and specifically in the department that dealt with credit, what is credit?
Well, first I want to thank you, Ushu, for that wonderful introduction there. Jumbo, to all my friends out there, hope you're all doing well. That's an excellent question. The simplest way I can answer that is credit is ultimately how much a bank trusts you. And they assign you a number score. So the score ranges between 300 on the low side and 850 on the high side. So each person that has credit is assigned a number score, and that score determines basically how much a bank trusts you to give you a loan for a house, right, or a car, or anything of that nature.
So that's what is credit, having those points that range from 300 to 950, did you say?
850.
To 850. So, well, I think that's the scale. If that's the scale, what do you think is the worst credit someone would have? Is that like having a 300-point credit, or it's maybe 500? So how would you rank someone that has bad credit?
So a lot of the banks and credit agencies will say that anything 700 and above is considered, good credit. 750 to 850 is exceptional credit. Probably about 620 to 690 is about average credit, and anything below 620 I would say is below average credit. Most Americans fall in the range between probably about 650 to 750 in that range.
650 to 750.
And if you're in that 650 to 750 range, you could get a loan for pretty much anything, a car, a house, whatever you need to buy.
Well, okay. So I think that's pretty much summarizes like where someone should be if he wants to have good credit. You need to at least have something like above 650 points, and anything below that is not really worse, but it may be worse depending on what the difference is.
Absolutely, and let me tell all you guys out there, I'm very proud right now. I just checked my personal credit score the other day, and it's 755. But there was a point in time where my score was very much below 650.
Right.
It was very below average. So, if you're out there and you find out that your score isn't that great, don't sweat it. With the right techniques and with the self-discipline, you could take your score from a 600 to a 700 in a pretty short amount of time.
Okay, so, well, we know that from that scale, you should be having something at least above 650. But the question may be, what does that mean to have good credit? Basing on what you've explained to do with that scale, but also in terms of having a loan. Would someone be given a loan of a car, or maybe of a phone? Maybe would someone buy a house based on his credit? How, if I'm to simplify the question, how would you relate the points on that scale to having an institution offer you a loan?
Absolutely. So obviously, the better your credit score, the better interest rate you're going to get. And the better interest rate you get from a financial institution, the more money you're going to save over the term of your loan. So say, you're talking, for instance, I have my little cheat sheet here. If you want to take out, so about an average, I'd say, price for a decent home is $100,000.
Right.
So $100,000, I have it broken down here. A 5% 15-year loan, so a 5% interest rate. So someone with good credit will get a 5% interest rate. Someone with okay average credit, they might get an 8% interest rate. And someone with horrible credit might, I have 18%, or someone who's getting taken advantage of might have an 18% interest rate. So your monthly payment, if you have a 5% interest rate and you have good credit, is $790 per month. At 8%, your monthly payment jumps to $955 a month. At 18%, your monthly payment is $1,610 per month.
Oh my gosh, that's too much.
Now, also I have here, so the total that you will pay back on that loan at a 5% interest rate over 15 years, you will pay back $142,343. So that's $42,000 in interest over 15 years.
42,000. So the principal is 100,000, right?
Right.
Okay.
So you take that original loan at 100,000, and the bank says, okay, we'll give you that 100,000, and since you have a good credit score, we'll only do a 5% interest rate.
Right.
So in total, you're going to pay back the bank $42,000. Now let's say you have an okay credit score. The bank says, all right, we're going to give you an 8% interest rate because your credit is okay. Over the term of that loan, you're going to pay back the bank in 15 years $172,000. So you see what I mean? From a 5% interest rate, just 3%, it's a difference of $30,000 over the 15-year course of that loan. And now, bear with me, guys. This is the 18%. Those of you, anyone who has an 18% interest rate over a 15-year loan, that's $289,000.
Wow, that's
almost $100,000 more.
So from what you've said, I think your interest rate that you're gonna get from any loan will be based on the score on that credit scale. For example, if you have 650, your interest rate is not gonna be like that one of someone that has maybe 750.
Exactly.
There is a difference.
Exactly.
So which moves us to another question. Well, then what should our families, refugee families that came to the US, do to make sure they're not victims of low points on the credit scale? What should they do to keep a good credit?
Absolutely, that's a great question. So I guess the first thing is banks want to see your ability to make payments on time. So some of the first payments that you'll make here in America, say, is your utility bill, your electric bill. Make sure you get that electric bill in your name and make sure you're making those payments on time. The second most important thing, you come here and you're renting a home, okay? Make sure you pay each month your monthly payment by check, because that way the bank can see paper trail evidence that you're paying every month. Whereas if you pay in cash, you have no evidence. So the bank can't pull your records, the bank can't see. Even you might have paid your landlord perfectly for 5 years, but if you were paying him in cash, there's no record of it, and to the banks it doesn't exist. Other than that, I would say opening up a credit card. once you get some credit established and making sure you make your payments on time and things like that.
Well, by the way, thank you so much for having mentioned that. I think if you saw from our Facebook post, we have this person that is a private lender, and he's he asks for maybe $10,000 from people as a down payment, and he says, I'm gonna buy you a house. You're gonna pay me back, and every monthly payments will be maybe 1,250, and the interest is at 18%. This is like horrible. One of the reasons why we find this like really very, very, very bad is most of our people are not informed on like the procedures of going to the bank and asking for a loan, and they think maybe they don't have good credit, and they're just gonna be screwed. So like, okay, let's use this guy. He's he's a very nice guy. He's trying to help us find apartments, and he's selling us the houses. He's just making our lives easy. But the other thing is, he's not actually making their life easy. As you've mentioned, someone comes and helps you buy a house, but this very person, like, he doesn't live here, so you have to pay him using maybe a check and send it over.
Sure.
You have no receipts. He doesn't really give them receipts.
Right.
And this is serious. He's not giving them receipts, and there is no proof that you're actually paying for the house. So even after maybe the 10 years or the 5 years, depending on what you agreed on, you'll have made the payments, and you think the house is going to be yours, and he might say no, and you have no proof. So this is the magnitude of how terrible these private lenders who are actually reaching out to our families are doing. It's a financial ruin to most of them, because they are losing. The interest is bad. There is no proof that they're making payments, and they just left out that advantage of having gone through a bank and having everything done officially. So I really appreciated you trying to emphasize on that point, that it's rather better them to go to the banks and have these banks do all the paperwork for them. It's going to help them build credit also, but the private lenders don't have, they don't look at their credit. They're like, okay, your credit is screwed. You've just arrived in the U.S. It's maybe 3 years. You have nothing that you're paying for, so your credit is bad. So they discourage them thinking, because they came here and they don't have anything they're paying for, their credit is bad. Is that the case though? Like, if someone comes here, he has nothing he's paying for, does that mean like their credit is bad?
Well, I'll give you an example. My mother thought she had horrible credit, and I said, you know what? Find out. It's free to look at your credit, and we ended up looking at my mom's credit score, and it was much better than she thought. I encourage every one of you out there, at a minimum, to download on your smartphone the Credit Karma app. It's very easy to download. It's very easy to set up.
We're going to put the link in the description.
It'll put the link, and it'll give you an idea of your credit score. It'll show you your credit score, and then you can see. And not only that, it will give you tips on how to build your credit score. These private lenders, the thing you got to understand is these banks in the United States are regulated by the United States government.
Okay.
There's protections for consumers. So banks, there has to be some kind of ethical business standards with banks. A lot of these private lenders, the ethical and the morality is out the window. It doesn't exist, and they use people, and they get rich off of people.
Right. All right. So if we can switch gears a little bit here, I think people may have questions about like any relationship between maybe someone's credit score, credit standing, and their benefits with Social Security Administration. Is there any relationship? Like, if you have a bad credit, for instance, is that going to affect what you'll get from Social Security, maybe at your retirement?
That's a great question. The simple short answer is no. It will have no impact. What impacts what you'll get back during Social Security is how much money you've made throughout your working career. So the more money you put into Social Security, the more money that you'll end up getting back once you retire. But your credit score has no basis on that. The importance of your credit score is when you go to make a big purchase, like a home or a car, or let's say you guys want to start a business. If we have some entrepreneurs and businessmen and women out there who really have a good business savvy and have a good business idea, then you have a good credit score, then you can go to a bank, qualify for a $100,000 business loan, and hopefully create that's what America's about, entrepreneurship, and so yeah, those are the main things that a credit score is will impact. But yeah, what you get back from Social Security has no impact.
Has no impact. So yeah, your credit standing has no impact, says Eric. And now that we've mentioned about having a credit card as one of the ways to build up your credit, the other question might be, and you and I know this, there is that like credit card epidemic right now in the U.S.
Sure.
So there are those people that have like maybe 5 to 10 like credit cards. Would you really advise someone to have like 2, 3, 4 credit cards just because he or she wants to build his or her credit, or there is a limit on how many you should possess?
Absolutely not. I would say no more than 2. And a lot of people, and myself included as a younger man, I had this credit card and I just thought it was free money.
Right.
I didn't know there were repercussions to it, and I made some big mistakes, and I paid for it dearly. Credit cards are not inherently an evil thing, but you can get into trouble quickly with them because they charge you interest. So, if you've got a credit card with a $5,000 spending limit, and you buy something that's $4,000, well, then you're going to start getting charged 18%. And a lot of these credit cards have 18, 20% interest. They're very high rates. So what you want to do is make small purchases and pay them off every month. So maybe pay your electric bill with a credit card and then pay it off every month, and that way you'll build your credit and you'll stay out of trouble with the credit cards.
Okay, and I think we're talking about this like off camera. You talked about someone having maybe a credit limit of maybe 1,000. So when you say you should make smaller purchases, like what do you mean specifically? Because someone may say, okay, and I have 1,000, maybe I can spend 500, maybe I can spend 800. What does that mean, having small purchases? That's
a great question. You really never want to go over 50% of your credit line.
50%.
Right. So if you're, and I honestly, the credit bureaus would advise don't go over 30%. But me personally, sometimes things happen. Sometimes emergencies happen, and sometimes, that is another reason why credit cards are good in case you have an emergency, and maybe you're not getting paid until tomorrow, but you need to pay for a bill, or your child needs something, and so we've all been there.
Yes.
But ideally, you want to stay under 50%. So if you have a credit line of $1,000, you don't ever want to go over 500. The credit bureaus would probably tell you to not go over 300.
Okay, and just to be very specific, you've mentioned that it's not okay to have like many credit cards opened in your name. What's the effect of having like many credit cards in your name?
So if you open a lot of credit cards, especially in a short amount of time, the banks are going to look at you and consider you unstable. They're going to say, wait a second. Eric just opened up 5 credit cards in 3 months. Is he having financial troubles? Is he gambling? Is he drinking? Like, is there a problem there? Is he not smart with his money?
Right.
And if these banks start thinking that, then guess what? They're not going to give you a great interest rate, and they're not going to give you, a good loan because they don't trust you.
Yes, I really wanted you to stress that point, because I do think our viewers might need to be cautioned on the effect of having many credit cards in their names, because some folks might think it's cool, like I can have 1, 2, 3 and that's okay, but having that doubt on you because you have many of them, poses a threat to folks who wish to offer you loans in the future.
Absolutely.
Now, you and I talked before about the issue of student loans. As a former bank employee, and your experience with your personal life and to do with finances, I know in this country right now, like, we have many students, and these students also happen to be some of the refugees, young people that were resettled here, and I think you and I can also agree that credit, having that free money as loans, in this case it's students loan that I'm talking about, people might just think it's free money, I'll pay it back at some point. Would you really advise a young refugee boy or girl who is going to school to take up a loan?
That's a great question. You know what? When I was in high school, 12, 13 years ago, my professors and teachers, they told us as students, go to college. Take a loan out. It doesn't matter what you study. Get the college degree. You'll get a job. Everything will be great. And then the recession, the Great Recession hit in 2008, 2009, which was when I was starting to go to school and graduate.
Right.
The job market was terrible.
Right.
We couldn't find jobs. But guess what? I had taken out $40,000 in student loans. And the banks that gave me those loans, they didn't care that I couldn't find a job. They said, pay me. They said, your loans are due. You need to pay. I think education is great. I really do. I'm a big proponent of it. I just want to urge, all the young men and women out there, do your research.
Right.
Make sure that whatever your field of study is, that there's going to be jobs when you graduate. You can look at the Department of Labor websites. You can look at projections as far as your field, whether it's agriculture or chemistry or teaching, and you can see what the projection will be for the next 5, 10, 20 years. Are there going to be jobs in your field? And it'll give you the median salary, so how much that you'll be making in those jobs. And so, because, keep in mind that, most Americans, it's our system that we have, unfortunately, are going to have to take loans. These loans have interest rates, and you will have to pay them back. So make sure that, whatever field you study, make sure that, you'll be able to find a job and that you'll be able to make those loan payment backs. And it's never, ever, ever a bad idea to go to a trade school. A lot of my friends that went to trade school right after high school are making much more money than my friends that went to a university. So keep that in mind, because trade school is typically a lot cheaper as well.
And just a little bit on that. So when you start making payments on these student loans, now that we're talking about credit, is it gonna help build your credit, or it's not?
Yeah, absolutely. For a lot of people, that's one of the best ways to help them build their credit is the student loans. So yes, making your student loan payment on time will help you build your credit. And also, so there's different programs. I'm in one. It's called an income-based repayment. So my loans are through the federal government. I send them my pay stubs, and they see what I make per month, and then they lower my monthly payment, based on what I make. So the more money you make, the higher your payment will be. The less money you make, they'll lower your payment.
Oh, I see. So they just made your life easier.
Absolutely. And there was a point in time, where I've had jobs where I didn't make a lot of money, and they lowered my payment to $0 a month.
Wow.
Now they were still charging me interest every month. My student loans are at a 6% interest rate, so whatever balance I have left remaining, the federal government says you don't have to make a payment, but they're still charging interest, so my loan is if I don't make any payments, my loan is still
be growing,
getting bigger. Correct.
So I think if I'm to clarify this, I think when we're talking about credit, it's about how much trust financial institutions out there are having in you. So
it's a good point. It's all about trust with credit scores, and you'll see a lot of young men and women, especially who don't have a credit score yet, their parents will co-sign. So if they need a loan for a car, maybe they don't have a great credit score, but their parents have credit. Well, their parents will co-sign on a loan, basically saying, if my son or daughter screws up and can't make the payments, I'll make the payments. It'll fall on me. It'll be my responsibility. So that's also very common as well.
Yeah, so that's what that means. If someone co-signs, he agrees that if you fail to meet your financial obligations, he's going to be the one in charge.
Right, exactly. And usually a co-signer is used for someone who doesn't have a great credit score, but they still need a car or need a loan. So they'll get someone that has a good credit score to co-sign, basically telling the bank, hey, don't worry. If this person can't make the payments, if they screw up, I'm here. I'm responsible. I'll take over.
Wow. So that's I think that's also another opportunity for many of the young people, like for instance, who do not really have credit, to reach out to their parents and say, hey, please help me begin at least,
Sure.
Improving on my points. And I think for today's questions, based on how people respond to this video, we might have more specific questions, because I know many of the folks in the refugee community that were settled here do not really know anything about credit and credit building. And it's something that worries us so much, and including you, because we've talked this off camera, and you've also admitted that this is not good. More especially people buying houses at like insane prices like that.
Absolutely, and I want to throw it out there as well. I think we talked about this off camera too. It's not just our refugee communities. Don't feel like it's just you guys.
Right.
American children, Americans don't know about credit. My father doesn't know a lot about credit. I meet a lot of American people in their 40s, 50s, and 60s that don't know a lot about credit. We don't teach it in our high schools or primary schools. We do a very bad job of educating people on this. So don't feel like it's just you guys. It's our whole society. And unfortunately, the less you know about this stuff, the more you're going to end up paying. And especially with predatory lenders and stuff like that, it could get really ugly really fast. So that's why we want to make this video, to help you guys out, to look out for you guys, to do the right thing, and to help save you guys some money. So please, I encourage you, if you have any questions, I'm not saying I have all the answers, but I have enough connections with people in different
Eric is here for us, people.
Banking industries. I'm here for you guys. So throw your questions down there. If I can't answer them, I promise you I will find an answer and I'll get back to you. But yeah, I look forward, if there's any other topics that you want us to touch on, Bitcoin, cryptocurrency,
investments. I think we should talk about investments next time. Yeah.
Stocks, 401ks, that's something I even know a little bit more about than even FICO scores and credit scores. But yeah.
I mean, to say this, I was very surprised when a friend sent me a message asking that, is that okay if I buy some Bitcoins? And well, I didn't have like a very specific answer, but I was like, I'm not saying it's a scam, but I do believe it's a win-loss situation. So please try to hold on as I find out some details. And like, she was so much into it. I think she wanted to make investments. Like, she wanted to go into crypto and specifically the Bitcoins. But I don't know whether she was using a specific application or website. And it's scary. Some of this information just facts out, and people are worried to dive into things which otherwise you and I here cannot know whether they may profit from it or not. But of course, that's the reason why we have to keep talking about these things.
Absolutely. And a little teaser, cryptocurrencies, I've made some money off them. However, a lot of these platforms get hacked. A lot of these websites get hacked, and if they get hacked, guess what? You could lose your money like that. Now, if you put money into a bank account, let's say, I believe the FDIC secures you up to $250,000.
Wow.
So if something would happen, and you lose, and the money gets low, I don't know, the economy goes down or something, the bank goes bankrupt, let's say, the bank that you bank with, your money is still protected by the full faith and credit of the United States government.
Yeah.
Bitcoins? No. Someone hacks the Bitcoin exchange and you got $1,000 worth of Bitcoin on there. Guess what? It's gone. It's gone.
It's gone. So it's not FDIC insured.
It's not backed by the government. Bitcoins are not backed by any government. Nothing like that. So once you lose that, someone hacks it, it's gone.
It's gone. So it's not insured, because I think FDIC is the Federal Deposits Insurance Company.
Right.
And so any financial institutions that are not insured by that Federal Deposits Insurance Company, is a financial threat to yourself, because you just, I don't know, it's like betting, you're gambling, I do it. If there is a loss, there is a loss. But I think since you've done it, of course, you'd suggest it to someone else,
Yeah, I could suggest, and this, we don't want to give him too much because we want him to come back and view the next video. So,
All right.
I have some platforms where you can trade Bitcoins, you can trade crypto, not just Bitcoins. There's a lot of different cryptocurrencies, and I do think it's the future. And I think it's a smart investment as a part of your portfolio. Like right now, I keep about 5 to 10% of my money in cryptocurrencies. I have a good amount in stocks, and then I have some in just cash in a bank account, and some like gold and silver and stuff like that. So it's all about diversification, diversifying your money. Again, we want them to come back and we want to view. We want you guys to.
All right, just hold on to that. So thank you so much for all those viewing. I think Eric, thank you so much for contributing to Refugee News and Information Africa, and specifically news branch Kyangwali News. And what we're going to tell you is we'll be coming back with Eric. He has more to do with investments, as he has mentioned previously, and we'll be diving into all this stuff. And of course, we are doing this to make sure you have the information and you can utilize these opportunities out there, should it be investment or building your credit, and anything beyond that. The other issue is immigration, but of course we can't talk about immigration right now. So thank you so much.
Thank you. Knowledge is power.
Knowledge is power, as you talked about it last time. I think we're talking off camera, and you say refugees are not only hungry of food, but they're also hungry of information.
Knowledge and information.
Yes.
That's,
Yes.
everybody,
So that was very
everybody I've
powerful.
met from Africa, that's what I love about the Congolese people and just everybody, is they're so hungry for information, and it's wonderful. And keep that hunger. And this is whatever you learn today from us or any of our videos, spread it to other people. Don't keep that information to yourself and that knowledge to yourself. Share it to your friends, your family, help lift people up, and help each other out.
Thank you so much, Eric.
You got it.
Thank
Machana
you.
away, my friends. Have a nice day.
Thank you so much.